Good weekend, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for the evening of Friday, October 6th, 2023. Wow. Let's talk a little bit about what is going on. We had the jobs report today, and I'm not going to go through the whole thing. I did it in the ETF report. So go there to read everything, okay, or listen and see what I had to say, because that's where the meat is. I don't want to repeat it on each one of these. Suffice to say, a blowout number, adding over 360,000 jobs. The big question's going to be, are we adding these jobs and creating inflation, or does this week's CPI report call it a day? We're doing that. We're not creating the inflation. And we are definitely, at this point, the last reports, not seeing wage inflation. If anything, we're seeing a very small decline, but it's consistent now in wage inflation. The JOLTS report this week showed that there's more jobs being offered, more people taking them, and more people are not switching from one job to the other because not getting big pay increases. So now it's about, I better do well at my job. That's how I'll get my pay increase down the road. Just logic tells you all this. On the energy market, it appears that part of what might be behind this monstrous decline that we've recently seen could be that the U.S. and Saudi Arabia are getting back as buddies. And there's a deal about to be made if the Saudis are willing, for the first time, they have never recognized Israel. If they recognize Israel and they set up diplomatic relations, the Biden administration wants to offer a defense pact, maybe arms, and maybe show them how to get going and build nuclear, if you will, stations within Saudi Arabia, not for military, for civilian purposes, unlike what Iran calls civilian purposes. So you put that together, and now you get to see, oh boy, there's something else brewing. Now, the Biden administration today is walking back. There's so much blowout they're catching. They don't know what they're doing. I've made that very clear from my perspective. There is no game plan. This is all incompetent people there. And now they're saying, no, the border wall, where the president yesterday said it's all Trump's fault. This is money we have to spend, so we're going to do it. The president of Mexico today, he's quoted, go to the newswire services. They'll never build the wall. He heard that from Biden and other people. I don't know what reality is, but the blowback is now the conservative groups, the conservationists, are all over Biden. He can't do anything right. Why didn't he come out and just say at the beginning instead of taking credit? And that's what he did yesterday. I think you'd agree. Go read yesterday's news. Nowhere does it say in there that he's not taking credit. We're going to build another 20 miles. He could have said, we're being forced in to build more miles. Listen, folks, I don't want to. I got to do it. The money's been there. By law, it has to be done. He didn't come out that way. So it's how you present things. Do you take credit for it and see how that flies, or do you walk away from it, but we have to do it? I think he did it the wrong way, all right? But regardless, it's going to be built. And you'll get the 20 miles. Does it mean anything? Who the heck knows? The bigger issue is what's going on in all the cities, and they're attacking. His base is attacking him, certainly in Chicago. And now New York. New York started picking up today the gauntlet, and they are going after the president, and they should be doing what Chicago did. Get the governor, get the mayor, get together, make it to the press, and attack. Because you can't have all this coming in and breaking things. It just won't work, all right? Then the other thing the governments eventually have to do is something about crime in big cities, but that's another issue. We're commodity people. We're traders, but it affects us. And it affects me personally because the Chicago Mercantile is threatening to leave Chicago. Mayor wants to tax transactions, financial transactions. Guess what? With the flip of a switch, you heard what I just said, those servers, they're all based out of state. We're not doing the transactions here. They're being done in New Jersey. They're being done wherever. There's no tax on them. Uh-oh. I want to talk to you about the stock indices because they're important. On the 4th, now today's the 6th, on the 4th, I did a special report. And that report is so darn important, I don't know where to take you with it. What it shows you is the seasonality as to what happens from the 4th of October going into the end of the year. On a 30, a 15, and a 5-year basis with the data put together from the Moore Research Center. Now, the first thing I have to say, and I will, past performance is no guarantee of future performance, period. When I look at seasonal data, I look to see is the market going to go with that. In other words, the chart tells me what to do, but if the seasonality is there, I get a lot of courage from it. I am telling you, all of these are screaming that we may be making a bottom in these markets. You heard what I just said. In fact, may have made it. This next week is very important because you get your CPI report and it's going to tell us some ideas. Before I go too far, that report's going to go off my website. You heard the word off come Monday. So if you want to see this report, now's the time to do it. It won't include bar charts like this. Not going to be there. I'm not going to give you chart analysis in any way. I will give you the commentary as to what I'm seeing as it goes over it. It's based on one thing, seasonal charts. And it's on all 4 of the stock indices. I didn't want to do one. Is it time sensitive? It's now. It's not for 2 weeks from now. It's for right now. How do you get it? Go to our website, IraEpstein.com if you're questioning that, or move your cursor to the top up here and there'll be an icon. If you're on the website, it's under the word research. Pretty simple. It's going off Monday, and they're gone. You don't get to see them again. That's the only place you can get them. So my advice, what do you have to lose? Take a look at it. Sit down, have some coffee, and go, isn't that interesting? That's where I think you're going to be. All right. So we come in, and on a monthly basis, this market is still bullish. You know, when I watch some long-term traders come on CNBC and they'll say, you know, you guys can all talk all you want, but on the longer term, the charts are still bullish. When you look at a monthly, they are right. You're having a correction, but you're still over the 18-month. And isn't it magical? It's at 41.28, that number. How many traders are saying the 4,200, 4,100 level is the important number? It's just interesting when that happens. Now, on the S&P, the momentum has been down. It didn't just come down. You actually ended up this week up because of today's monster rally in the markets. But if you and I step back and look at this chart a little bit, all right, when did it turn down? It turned down not here. That was September 15th, just last week. You had your break, and all of a sudden, you kept it going, and now you're getting a bounce. Look at my stock report. Please look at that index report. I think you're going to get a feel for something. Okay, let's come to the next chart if I could now. And let's go to the next one. This is where I want to be. Okay, so now let's get to a bar chart and take a look at what we want to see. There's no question you've got lower highs, lower lows, and when you put the swing line on, you even see it better. You don't see it this way. There's no way you see the swing line this way. I'm trained in it. I created it. No way you see it. You definitely see it this way. So the market's going to have resistance and try in order to jack out under the current chart pattern. Current pattern. That pattern can change. You'd have to get over 45.1775 in order to negate the downtrend. More likely is a challenge if you rally hard back into wherever the 18-week average comes in, with support being down to the 4,200 level. And when I put in the Bollinger Band, you don't have to make it to the 4,200 level. Markets will stay within the black bands 95% of the time. So you got down, you probed under it, and you came roaring back by the end of the week. That's my point. The resistance doesn't change. It's going to be in that 44, 47 level. You are oversold. Do I think new money is being deployed on the bear side when you're oversold? Let me give you the answer. Did the sound go? No. All right. Then we get to the Dow. Same thing. Where do you think I'm thinking the shorts are covering? I am not saying to you that we have an all-out buy signal off the chart. I am saying we have an all-out that I think the pros covered their shorts. When we get to the NASDAQ, I'm looking for the market to come up. Now, if you look at the daily chart, you lost the embedded reading about 4 days ago. I'm going from memory. And I kept saying this market should make it back to the 18-day average of closes. It had a rally over 100 and some odd points to do it. Today, right there. So I'm not going to be surprised if you get back here. In the Russell, this is one of the weakest. It's been that way. Down to the Bollinger Band for the first times and oversold. Lots of big-time resistance up here. So am I thinking, and this is very important, that even via my report, we're going to turn from this bear into a raging bull again? No. But do I think we're probably making lows and may have made them? Yes. We're right in the cusp, that area where I'm looking for it before the market picks up and rallies the next part of this quarter back to the upside. It fits in with so much work. Does it have to happen? No. Am I looking at more or less off the seasonals? I absolutely am. Would I hang my hat on the seasonals? I'd never hang my hat on any one thing at any point, but I'm a student of them. If I wasn't, I've wasted a heck of a lot of my money over 30 some odd years of following them and buying services. Still bearish here. So what's the Fed do with all this? Here's what I think you have to agree to. Jobs are strong. If CPI comes in strong, whatever we're going to define that as the week goes on, then the Fed has to go again on the rate. Does the Fed want to stop? I think so. Why? The market's doing the job for the Fed. Did you take a look at what you went to today in the 10-year note? You hit 4.9. Remember Bill Ackman? He was betting the ranch. The market would go to 5. For all purposes, he got where he wanted to go. Does it matter if you hit that extra tenth or not? No. Did I just tell you the other day, whenever you're going to get here and you rally or you break hard, one of the two, you always get new analysts that will say when something's low, there's a big number, it's going down to even lower, or if it goes high, it's going to another number up there. Is 5% a realistic number? Probably. And we're in that area. That does not mean I am telling you interest rates can't go higher. I'm not saying that. I'm saying you're in ballparks where the Fed has to make a decision here. The problem we keep having is that every day we're getting more of these U.S. Treasury auctions, and in order to sell the goods, they're offering higher and higher rates. They're doing the Fed's job for it. Why are they doing that? Because we, the people of America, have hired, by election, politicians that don't know how to balance a budget. Can I be any clearer? There's no reason after the COVID pandemic, and we threw all that helicopter money, to not cut spending. But because they want to get elected again, they spend. It's really pretty simple. It's not difficult. You can see how the market still embedded, bearish as can be. It hasn't changed. Dollar, Each time you hit that Bollinger Band, if you're a student of mine, I will tell you over and over, no, you are not supposed to be a buyer against Bollinger Bands. When the red line closes under 79, I won't want to enact a program of buying on breaks. But until that happens, that's what I think the pros are doing. I think they're buying on breaks. In the euro, you're not embedded. This market's finding its support at the Bollinger Band. Resistance is back up at the 107.35 level. That's a full point higher. We'll see what happens. Are they trying to not raise rates in the ECB any longer? Well, you know that there's a huge argument there that are they done or not. That they're facing what the United States is, same thing. Canada, void of a trend on the weekly chart. Higher high, lower low, into the Bollinger Band and stopping there, into the Bollinger Band and stopping the rally there. Got to learn to work with Bollinger Bands, the importance of them, because you never believe them. And until you get to that point, like I am, that's when reality starts setting in for you. Same thing here. Notice how you hit the band, you bounce away. You'll hit the band, you bounce away. That doesn't mean you can't go lower, but you're not trying to sell into that band. You're still embedded in the end. So the government there is talking, let's tweak some more our curve yields. They tried to scare the market one time. They came out the past couple of weeks and they did a surprise auction, thinking they'd scare the market off. You got a rally. Well, now the market's back down there. They're the only major world currency left that is still with a negative rate. They're trying to hold on to it. In Bitcoin, you're out of your downtrend. I don't know that you're in an uptrend. I should have had these arrows pointing up. I just forgot. They should both be pointing up from right there. Now, Brent versus WTI. This is the difference. I want to apologize to a gentleman out there. I don't know everybody's names because when you write me on YouTube, you have your pseudonyms that you're using. All right. You were dead right. I went and checked the formula because I kept saying it's got to be $1 difference. No, I put in the wrong formula. Instead of subtracting Brent from WTI on the dailies, I had divide by. I don't know when I went in and I must have just done it recently, not paid attention. You were right. The ratio was 1.04. The difference is 389. I apologize to you. Great catch. Okay, so now we've fallen back to the support line here. You lost the momentum. The embedded reading's over. I've given you some reasons why that could be the case too. Same thing happening here. So if you take the inflation equation of high gasoline prices out of this, because they have come down. They've come down sharply. Unfortunately, I'm watching heating oil, but I'm happy heating oil fell. I hate that I was wrong in looking at it, that it had to lose the embedded reading, and I didn't think it would. I thought it would actually be stronger going into the winter. Terrible on my part. And now what? Well, I'm going to enjoy that my heating bill won't go up so much, right? I happen to use natural gas in my home, and I know a lot of you use the heating oil. Either way it goes, I'm happy. So that is a very good thing. So you put it together, you've got your game plan, you had a monster day today on a number that had you walked in today and you were to tell somebody, for most of you, hey, we're going to do a blowout jobs number. We're not going to do 170. We're going to do 250. You'd have said the market's down. 300, the market's got to crash. Double that. How could the market do this? That's why even if you have the information ahead of time, I tell people this all the time, it doesn't mean you'll get it right. This market, you can do algorithm trades till you're blue in the face, put it in for the probabilities. I have yet to see these things work, all right? I just haven't. You know, there are AI systems that trade the markets. I look at them. I have yet to see them make money on a regular basis, all right? I use AI in a different way. I look for a probability on a pattern. Forget the end result, the pattern. That's what I'm doing and always looking for that. And we're building that right now. Been building it for all summer long. Really back into it in a big way right now because I have an idea that I think works, and I will at one point present it. All right. So, again, I'm going to remind you, it's the weekend. Take your cup of coffee, take a beer, I don't care, whichever you do, or if you're more sophisticated, a little wine. Take a look at my stock report. You can move your cursor up here. You can go to iraepstein.com under the word research. And it's a good time for you to take that enhanced Bollinger Band course because you're seeing all over the board the impact. I'm Ira. Lengthy report, but important. You have a great weekend.